Hey, what's up guys? John here. Joe Biden is now partnering up under this proposal with all banks throughout America to scrub our accounts looking for unreported income over the last couple years. If you have money that maybe you didn't report in your business and it's sitting in that account, that's a big problem. Or if maybe you made some short-term gains and you haven't reported, this could also be a problem. This may be penalized by the IRS at a high interest rate. In this video, I'm gonna break down exactly what is happening to our freedoms and our rights in America under this new proposal. With that being said, please smash that like button. When you hit the like button, YouTube's gonna share the content and educate more people as to what's really going on. Please hit that like button and let's begin. Biden's tax plan leans on banks to find unreported income. The proposal would require banks to report annual account inflows and outflows to the IRS. This just came out. Part of the funding for Biden's $1.8 trillion America's Families Plan hinges on beefed up reporting requirements for banks designed to identify unreported income. The proposal would require banks to report annual account inflows and outflows to the IRS. The requirement would also extend to peer-to-peer payments such as Venmo, but wouldn't require individuals and businesses to report any additional information to Big Brother, according to people familiar with the plan, allegedly. Financial institutions already must report interest, dividend, and investment income to the IRS and can get bank information during audits. What they're essentially trying to do here is they are trying to make it seem like this isn't a huge overreach on your freedoms and your rights, because during audits, they can do this. Well, that's during an audit. This isn't every single time. It's very rare that someone will get audited by the IRS. However, this new reach is essentially going to be commonplace. Providing the IRS this information will help improve audit selection so it can better target its enforcement activity on the most suspect evaders, avoiding unnecessary and costly audits of ordinary taxpayers, the Treasury Department said in a statement Wednesday. So with this whole plan, essentially, is they are going to make things very challenging for nearly all of us. The Biden plan, which includes new spending on childcare, education, paid leave, relies on $700 billion in revenue the administration says would come from a significant expansion of the IRS. So essentially, Big Brother is going to get huge and small business is going to shrink. Most people rely with small businesses on write-offs, on depreciation, on certain loopholes to kind of get by and make good. Now with the high cost of goods right now, it's going to be very challenging for people to weather this storm, especially as Biden is increasing taxes to rates that people just aren't accustomed to. Right now in New York, if capital gains is going to be roughly 55%. So all these people that are making money in crypto and they think that this profit is going to be real profit, it's not going to be. It's probably going to be half of what you think under Biden's tax plan, because it's going to be roughly 50% of your gains almost anywhere in the country. And you take all that risk, and if you don't report it, it'll be that 50% plus penalties from the IRS. The plan would largely affect bank accounts of business owners, placing financial institutions at the center of the effort to curb unreported or misreported business income. The IRS estimates that up to 55% of business income is unreported or misreported. The proposal is expected to face pushback from the banking industry, which in the past has been critical of the costs associated with additional compliance burdens. The level of pushback will depend on how resource intensive it will prove for banks to comply, said Dan Stefano, a former attorney at the Office of Comptroller of Currency. If it was something that they already capture, it may not be such a big deal, Mr. Stefano said, but if not, I could see it adding significantly to their already considerable compliance costs and burdens. Former IRS office and progressive groups have for years floated the idea of using bank account information to narrow the tax gap the IRS estimates of taxes it believes they are owed and not paid. the gap near 600 billion in 2020, according to estimates by former IRS Commissioner Charles Rosati, who has advocated for the vision of the plan and others. It makes more sense to collect the taxes that are already on the books before we raise them to people that are already paying, Mr. Rosati said. So right now what we're going to see is we're going to see our economy go from a place where everyone has a lot of money to where now Big Brother finds a way to take all that money back to fund all of these programs, and then essentially they're going to force all of us into a large state of poverty so they can fund this. And when they fund this, they're going to have this huge Big Brother conglomerate. And then essentially what's going to happen is many of us will be dependent on Big Brother and their moves to simply survive. It's a sad situation here, what they're doing. And they're doing it in such a way to where they say that, the rich are the problem. Well, the rich aren't going to actually face any of these problems. They have money offshore. They have money hidden in assets. They are very smart. And because of that, they're going to likely be okay. But it's going to be small business. It's going to be a lot of mom and pop businesses that are going to get absolutely obliterated by this. The additional information would allow auditors to identify inconsistencies between a person's business and bank statement, former Treasury Secretary Larry Summers said. We require extensive reporting when employees send money to employees. He said, why shouldn't we require extensive reporting on interactions between wealthy customers and banks? Still compelling banks to share data on customers' accounts, a move that requires congressional approval would amount to just an initial step in narrowing the gap. Knowing how much money came into and out of an account doesn't itself tell the IRS whether there is unreported income. People can receive non-taxable gifts or spend money on deductible business expenses, for example. Rep. Kevin Brady of Texas, the top Republican on the House Ways and Means Committee, said the information reporting plan sounds like a dangerous overreach and runs the risk of turning local banks into extensions of the IRS. That's exactly what it's doing. Many Americans will be very resistant to that, he told reporters on Thursday. I do think there are ways to improve information reporting that isn't that intrusive. The IRS would need to figure out a way to use information to decide which business owners to audit and which questions to ask them. The plan also includes billions of dollars for technology and staffing so the IRS could digest and analyze that information. The jury is out whether the IRS has the capacity to do this properly, said Nina Olson, who was an in-house IRS watchdog from 2001 to 2019. The change might have some effect on tax compliance even if the IRS can't figure out how to use the information efficiently. That's because taxpayers might start being less aggressive in their tax affairs once they know the IRS has a clear view on their bank flows. So the big concern here is the fact that they could very likely find inefficiencies in our accounts and then backdate 6 years. So let me give you an example. Let's say that you're a small business owner. You own a lawn care business, and that business, you have certain write-offs that they think, shouldn't be there. And you owe $10,000. And then they go back the year before. You owe another $10,000. They go back 6 years. They say you owe $60,000. Okay, well now their penalties and interest at 0.5% every single month compounded. So you might, by the end of this, owe them $100,000 or more. And you're a small lawn care business. What does that mean? That means lights out. It means it's over for you and it's financial hardship. That, I think, is a very common trend if this proposal goes forward. And I think that this proposal likely does go forward because most things that they propose ends up just moving forward. So with that being said, what is going to happen to small business? Because we know, the big money, they're protected. They're not going to get impacted. They're moving money offshore. They're hiding them. And they're making smart decisions. And I think that now all new investors, entrepreneurs, business owners, we need to really think in the future because the future is going to be very different than anything we've ever experienced in the past. Meaning being very, very smart and shielding yourself from any type of issue that could come up down the road. What do you think about all this? Do you think this proposal is going to pass? And if so, do you think it's going to be a very big restriction on our freedoms and liberties in America? Drop your comments below. Also, smash that like button. When you hit the like button, YouTube is going to share the content, and the more people that see it, the more people that are educated as to what's really going on. And also, consider subscribing for more content on personal finance, real estate, business, and of course, money. Hey, if you'd like to learn how to get started on YouTube, click the link in my bio. It's a free live training. And if you'd like to learn how to invest in cash flowing multifamily real estate for beginners, there's a link there as well. All right, guys. If you'd like to learn how to get started on YouTube, click the link in my bio. It's a free live training. And if you'd like to learn how to invest in cash flowing multifamily real estate for beginners, there's a link there as well. All right, guys.